Phil Muscatello and Finpods are authorised reps of Money Sherpa. The information in this podcast is general in nature and doesn't take into account your personal situation. Shares for beginners. Weekend Watchlist.
G'day and welcome back to Shares for Beginners Weekend Watchlist, where we take a close look at an individual company that you may wish to consider for your watchlist. It's not a recommendation to buy, but a way for you to learn how Stockopedia screens for value. Joining me today is Elio D'Amato, and we're talking Promedicus, ASX code PME. G'day, Elio.
Yeah, g'day, Phil. I hope everyone enjoys this one today. I mean, it's one of my favourite stocks, to be quite frank and honest, both as the way they run the business and what they've been able to achieve. But, geez, I tell you what, you're definitely paying to play if you want to get involved right now, and we'll talk about that, no doubt, through the program.
Okay, and I just wanted to point out at this point that we're having a little holiday with Weekend Watchlist and Shares for Beginners repeat episodes for the next few weeks while I take a holiday, and we're going to be back live on October 12.
Well earned, and yes, I can't wait to do the podcast from the new abodes.
And also just a quick mention of last Sunday and what a wonderful Italian Grand Prix as well.
Yeah, well worth the watch.
Okay, so Promedicus. Now, Sam Hupert is the CEO. I met him this year at the Australian Shareholders Association conference where he made a great presentation. I mean, what an incredible story. What does he mean when he describes Promedicus as the radiologist's clinical desktop?
Well, this is where basically the definition of network effect comes in, because what network effect basically implies is that you just need them to do whatever it is you do on a daily basis. And what the vision was not only of Sam Hupert, but also Anthony Hall, both of which established the business back in 1983, was that they would create a platform from which basically all radiologists needed to use the software, as it were. And it allows them to help manage their practices top to bottom. And effectively, as Sam said, when you turn up to work every day, you turn on the computer and basically you need to use their system. And, I don't want to go too much into the history because that's only part of the story, but it's a really important part. I mean, back in 2009, when they actually made the acquisition of what's become known as Visage, as it were, and now up to Visage 7, they bought that for $3.5 million US. So back then, their market cap was $115 million. Today, it's $15.6 billion. So it's a great Australian story, no matter how you look at it. And I think really they've been successful in achieving that goal, or at least beginning the process of moving that goal of if a radiologist turns to work, they need to turn their computer on. Basically, Promedicus software is there and available for them to look at. And, I love so much about this business, particularly, they got this humble office space in Swan Street here in Richmond in Victoria. I mean, I love that. I wouldn't bury my cat there, but still, it's their global headquarters. I mean, it's fantastic. And with Visage, they got a technical team in Germany. Most importantly, they got a strong foothold in America, and they've got about 87% of all their revenues in that business coming from North America now. So, in effect, it was a very shrewd acquisition, which has really turbocharged this business and has just become a great Australian export story because, let's face it, if you are a radiologist and you really want to use the best of the best, then you are turning on Visage on a daily basis in order to get what you need. And there's so many potential uses of it. There's a reason why investors are so excited about what this could potentially bring.
And they have so many prestigious clients in the US, haven't they? They're just an incredible roster and roll call of names in the medical profession.
Yeah, very much so. So, I mean, last financial year that's just passed, they won their largest ever contract in Baylor, Scott and White. But, I mean, they've got something like 11 of the top 20 best US hospitals, whatever that means. And that ranges from Brigham and Women's. They've got Duke Health. For those that surf the internet a lot, I'm sure you've heard of the Mayo Clinic, and they've got the Arizona and Rochester businesses there in their operations. They've got Northwestern as well. So really they see this as being a strong growth potential avenue for the business. I mean, we're talking about what they call integrated delivery network companies, which are IDNs. That total addressable market, which is there's something like 650 million scans performed on a yearly basis. And that's just growing all the time as, worlds and the like, or advanced worlds age, as it were. And really the Visage software, as it were, can effectively target all of that. And its penetration at the moment, even though notwithstanding the wonderful clients that they have won in recent times, are still only 7%. So that can keep growing, and that there's a large addressable runway there. And in effect, once you embed the Visage system into your process, you just can't wean off it, quite frankly. So there's huge capacity, particularly in North America, for the company to keep growing. And investors at the moment are definitely paying that because of, as you mentioned, that roll call of quality clients that they not only have, but they keep winning. And I suppose that's what's really exciting about the year ahead, because, of course, when the dollar value comes through, we all scratch our heads and wonder why that's necessarily all that important. But then when you look at who they are and how long these agreements are for, and then all the other services you can potentially sell on the back of that and on top of that, then that is the really exciting bit. And that's where Promedicus really comes into its own. So, yeah, great clients that they have now. Great clients to come, I would assume, in regards to the US and the huge capacity there. So definitely one for the aggressive investor.
Another part of it is that there's a worldwide shortage of radiologists, and Promedicus helps to increase efficiency, doesn't it, for these people?
Yeah, very much so. I mean, any job in the world, anyone will tell you if you've been in the workforce for 30, 40 years, the minute you get bogged down by paperwork, you know how difficult it becomes. And let's face it, in the medical industry, which is highly litigious, there's a stack of it. So obviously anything that's online and delivered via an online delivery system creates significant efficiencies as it is. And then, of course, that's only the current game. Then there's the future game, which is all involving that buzzword AI, artificial intelligence, and a bit more that we'll discuss in a moment. But really, the actual company itself, just at its bare bones, as what it does every day, saves a radiologist a significant amount of time. And if you've had any, I suppose, exposure to any radiologists, no matter what state in this country you are or what country in the world you are, there is a massive demand for their services. So the more people they scan, obviously, because there's no flashing lights at the moment that tell us what's wrong with us, the more people they scan, the more that they'll be able to assess. It allows them to create those efficiencies because it can push more people through the pipeline. So Promedicus is definitely at the forefront of that, and really that's one of their markers of success, that ultimately they make the lives of the people that use their software much easier.
And their growth is driven mainly by contract wins, which they seem to be doing very well. And it's not an easy thing to get someone to sign off on these kind of contracts, because these are very, very large, prestigious institutions that don't move very quickly. So explain a little bit about that and how their process leads to building the business in the future.
Yeah, look, obviously you've hit the nail on the head with regards to these established, well-run businesses. They effectively know that what they do works. So whenever you're a new kid in the room, as it were, you have to convince them that what they are doing, yes, it works, but this will work better. So that is a process that obviously takes a lot of time and a lot of effort. And the sales team in regards to Promedicus are very much focused on that. But the thing is, as you say, the contract wins are a major element in regards to its growth. I mean, for example, in their last annual report that they had flagged to everyone, that basically, assuming they keep key contracts and no new ones, that forward revenue is going to be something greater than 600 million Australian dollars over the next 5 years, which is an amazing number. And it just shows you that network effect again. Once they get in there, they stay in there. And just like other businesses that have very similar arrangements in other industries, once you prove that what you do is actually better than what you currently have at the moment, you're basically a client for life, or they're a customer for life. So these institutions, obviously, given the highly litigious nature of, as I was saying, of what they are, they need to be very much proven in regards to the fact that Visage and Promedicus as a general business can actually add more value to their current operations. And that is not something that's just a turnkey. I mean, you just can't walk up to the largest hospitals in either North America or here in Australia and sit there and go, hey, listen, here's a bit of software, just plug it into your system, and away you go.
Sell them a monorail.
Yeah, that's right, exactly. I mean, look, and it's hard because they're low CapEx, right? So this is software. It's not necessarily a big machine, as it were. There's nothing you can touch and feel about it somewhat. So there's obviously a lot of education and a very long courtship that needs to occur in order to get a client over the line. But hell, as you've just alluded to, once you do become a client, you don't change unless there's something incredibly wrong with what you're doing. And there's a very large spend on R&D, which is research and development, and the company continues to remain at the forefront. So they're not resting on their laurels in regards to, we've got a software that basically everyone needs. No, it's about developing that software and then also adding new bells and whistles, let's call it that, in order to create an even heightened attractiveness of the program, not just to existing clients who obviously need those things, but to brand new ones as well, potentially. And as they go down that journey, you're going to see more of those contract wins. I'm pretty confident of that.
Yeah, it's worthwhile having a look at some of the videos you can find on YouTube of their imaging and how they turn their 2D images into 3D multi-layer images. They're incredible. And of course, this is one of these businesses that's going to really benefit from artificial intelligence and being able to wrangle all of that data.
That's right. I mean, there's so much to talk about PME, and I'm not going to take the fun out of it for everyone because, as you've just alluded to, there's a stack of it online. You can go to YouTube and have a look at that. But you touched on that AI, and that's a real buzzword, particularly here in Australia where we don't necessarily have all those semiconductor businesses that have driven much of the AI boom, as it were, in regards to our demand for those chips, as it were, moving forward. But in terms of the actual application, Promedicus is at the forefront. I mean, imagine you could do a scan, in downtown, I don't know, let's just say Preston here in Victoria, and then all of a sudden that scan is immediately compared against another 100,000, 200 million, as it were, of other scans of the same body part in order to identify what could potentially be wrong. Effectively, it is diagnosis that could potentially be done in a heartbeat. Now, that level of computing can only be done by AI and that grunt work, of course. So they're very much interested in where this field is taking us because it's in our general interests as, being wanting to live longer and obviously better from a health perspective, that ultimately they are successful. So that when they do take a scan of an arm, as it were, notwithstanding that an experienced doctor will easily be able to tell you if it's broken or dislocated or whatever the case may be. But if you could let the machines do that for you instantaneously, that could be quite massive. So they're obviously very keen in regards to expanding the use of AI within their services, which just makes perfect sense to me, and ultimately will change the industry completely once that's done. And let's face it, when it comes to running a health centre at the moment, no matter where you are in the world, finding cost efficiencies is key because let me tell you, even just going to see a GP costs a mozza, let alone going to see one of these specialists. So obviously, the cheaper that becomes, the more then that can be processed, the better the health outcomes that'll be done. So it's just win, win, win all along the food chain. And that's where Promedicus sees, again, one of the areas where it can really excel.
Are you picking shares on gut instinct? Buying on press tips or rumours? Do you struggle to find the time to keep up with the research and analysis that goes into evaluating potential stocks? Stockopedia are pleased to offer a special deal to listeners of this podcast, a 14-day free trial and a 10% discount on the first year of membership. Sign up now at y.stockopedia.com/SFB. There's no better time to access the most comprehensive, easy-to-use investing toolbox for DIY share investors. 10% off, 14-day free trial and a 30-day money-back guarantee. That's y.stockopedia.com/SFB. So we're all about the financials here, of course.
Of course.
And the glaring number in this particular company is the value score of 1. Talk to us about the money side of things.
Yeah, it's the elephant in the room, isn't it, Phil? Look, it has a very low value score, as you've alluded to. I shouldn't also dissuade, I might add, because it's a capital-light business, it's got an incredibly strong quality score, ranking right up the top there, and momentum, well, you don't need us at Stockopedia to tell you when your share price is going northeast.
Yeah, just look at that chart, for the last, since 2017, just, steady rise up the hill.
Yeah, exactly. So notwithstanding all of that, you're right. You want to get involved with Promedicus, you got to pay to play. There is definitely a lack of value there. This is the most expensive business on the ASX. I mean, the company trades on a forecast PE of close to 140. It's got an EV to EBITDA of something like 120 plus times or something of that ilk. So to be honest, I mean, look, of all the profitable companies out there, it'd be a narcissist to suggest that there was nothing but that you're paying above the odds in regards to this business. But I've been analysing companies for a very long time, Phil, and you alluded to that share price trend since 2017. I touched on the acquisition of Visage, which transformed the business and made them become what they were. And obviously, yeah, I don't want to be a cynic, but you will also look at analyst revisions, and they've been consistently tracking up as well. Problem is they've been lagging the share price, right? So share price goes up, then the analyst revisions go up, and then vice versa. Basically, analysts don't want to look stupid because if they put a valuation on, say, $50 in regards to Promedicus, they'll be held down and called idiots, and they'll basically lose their jobs. So they're ultimately writing up their valuation because we can play with that terminal value because that's free to us to have fun with. And that obviously then justifies that. Although notwithstanding that, the stock still has its doubters. I mean, again, because of that, really high level at the moment. I think its current valuation sits at around $135. So the price is obviously higher than that. But I think if you look at 6 months' time, all those hold recommendations that we're seeing at the moment, they'll probably still be there, and the price target will be a little bit higher than when it was. So, I mean, this is a bit of a lesson in regards to not just Promedicus, but we'll also talk about, stocks like Technology One and WiseTech and other companies that have been discussed in the past. When you're talking about companies of the upper echelon in regards to quality, capital light, strong growth, all those sorts of things, then, you really got to, if they keep delivering on those, the share price is going to look after itself, right? Irrespective of where the valuation may sit. I mean, I can remember first analysing it back below $3, and today it's close to 50 times that amount. So, basically there's been some volatile periods in between, let's face it, and obviously when, hospitals were shut over COVID, that wasn't great for their share price as well. But I mean, in regards to its operations, that network effect that we touched on earlier, and the fact that they've got such a large total addressable market and only a small slither of it, investors are willing to pay that premium at the moment to gain exposure to those future earnings. What do they actually look like? Well, that's still yet a bit of an unknown. No one knows the future. Ray Dalio said something about, the person that uses a crystal ball ends up with a mouthful of shattered glass, as it were. Well, we're not necessarily going to do that. You're not investing in this for dividends. I mean, it's like a putrid 0.37% at the moment at its current rate, although they do have special dividends from time to time. And look, if you had bought them back at $3, that dividend's obviously much more significant nowadays than what it is if you were buying them today. So that amazing capital appreciation is really, what we're talking about here in regards to Promedicus rather than the dividend yield. That's just a nice bonus for those that are looking for it. But, you got to be used to seeing a stock with a PE of above 100 generally in regards to it, and also an EV to EBITDA, which is also quite strong. And you just got to hold your nose because there ain't much of a dividend to excite. But, if you look at that growth trajectory and growth story ahead of it, particularly when you look at, those consistent ramp-ups of earnings expectations, not just from the company, but from analysts, then there's been a lot of good stuff that's happened with Promedicus. But never say never. One day it may very well end, but it ain't today.
So what are the risks? I mean, surely there's plenty of large imaging companies around the world. Why haven't they been able to duplicate this kind of success story when the market is so huge?
Obviously, that's a great point, and that's something to be very aware of whenever there's a successful sector globally. Look for places where there's going to be more competitors emerge, and we've seen that with a lot of our banks with our home lending rates going, or those provided home lending, that actually going up, whereas the big banks are lamenting that competition is increasing. So whenever there's a juicy thing to do, you're going to see new competitors come on. And Promedicus, Look, obviously, given the highly technical nature of the actual business itself, that creates a bit of an economic moat around the business. But there are competitors. I mean, even on the ASX, we've got a company by the name of Max7, which wants to effectively do a similar thing than what Promedicus has done and wants to ultimately grow that company and, take some of that total addressable market. And notwithstanding that Promedicus, and Sam might have told you that, we can definitely address everyone's needs, the reality is they're probably not. It's very difficult to get 100% of the total addressable market. So therefore, that's still a very lucrative bit of the pie. So there will inevitably be competitors that are out there. But I think, part of what makes Promedicus what it is the fact that they went in early. They were, somewhat true believers in this space. Anthony Hall and Sam Hubert that we talked about, they've actually, still strongly involved in the business, Sam being the CEO, of course, and together they own over 50% of the business or close to that with regards to their various vehicles and the like. And I think it's important to remind investors that they've actually been selling down as well. They sell down periodically every year, as it were, and that's only fair enough given this amazing monolith that they've grown and the returns that they've delivered for investors over a while. And it generally doesn't come as a surprise, so no investor sits there and thinks that it could be something untoward. I mean, they started this process in 2018 and they effectively sell down 1 million shares every year. And, they sold down their first million back when it was $8, and now it's significantly higher than that. So again, sometimes we can look too much in regards to also what the board members do. So then in regards to Promedicus, one is their strong economic moat. That strong bit. Two is still, it's a founder-led and driven business, which is, strong and everyone likes that, strong industry knowledge, et cetera, et cetera. And three, they are best of breed. Quite frankly, no one does what a PME does right now. If you weren't necessarily worried about the costs and all the minutiae of the finer detail, PME is where you need to be and where you want to be. And in a sector which is so heavily reliant on accurate and quality data, unless, till you get sued, then effectively that means that you're going to go with the best, right? You can't really take that much risk. So therefore, Promedicus is in that sweet spot where they've got those very sticky clients and a great product to boot. And again, that continuous investment in R&D is so important because it ensures that they stay ahead of the game to keep, as you say, those people, that are biting at their heels away because quite frankly, that is a risk for the company. Notwithstanding the high valuation that we've talked about, et cetera, that, someone comes out and replicates the PME model. But you need very deep pockets in order to do that. You do need quite a bit of time. And I think investors will get plenty of warning before that actually happens, before they actually need to make a formal decision on that.
Elio D'Amato, fantastic story about a fantastic company. Thanks very much for joining me today.
Thank you very much, Phil.
Thanks for listening to Shares for Beginners. You can find more at sharesforbeginners.com. If you enjoy listening, please take a moment to rate or review in your podcast player or tell a friend who might want to learn more about investing for their future.